Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market date for Thursday, March 3rd, 2022. I will do just an extremely brief update on the equity markets, but most of what I'm going to cover in this video will be commodities. I had a request to update those, and I've been meaning to. There's some things that are moving that I'm watching right now. My focus has been more on the equity markets lately, but I'm going to go through my watch list of various commodities here shortly. I just wanted to start out by saying, since the market's now closed, so far so good on the rejection off the downtrend line on the 60-minute chart of QQQ. I did an entire video on this today, so I'm not going to spend much more time. We had the the sell signal, the threshold of that 0.53 level right here recently, divergent high, and we pulled back. It was a decent pullback, nothing huge, down about 1.25%. But what I've done since then is I added a couple levels here, about 140, 150 right there. Some reactions. It's not a super solid level, but it is a support level, and more importantly, it has recent support. Actually, going back to right here, we broke that level with a big green candle, and look how many candles. This is Friday, the 25th of February. Look how many tests of that level, or very near test. To me, this holds a much higher weighting than anything that happened in the past. I try to look for as many reactions to define a support level as possible, but the ones most recently always carry a higher weighting than reactions you had in the past. So there it is. And even these breaks here, these were just intra-period whipsaws. These are the candlestick shadows. When the shadow's above, it's called a wick, just like on a candle. You got the body and then the wick. Down below, it's a tail. So those are all intra-period. Those are stick saves. You can see those right there where the bodies of the candles close right on that line, and so I think that'll do the trick. So here's the thing, near term, a break below that level, especially a 60-minute close, should bring us down to the next support. It's only minor support. It's 334.74. I wouldn't even, if we go down that way, depending on what's happening, I probably wouldn't even attempt to game a bounce there. So that's the levels to watch tomorrow, like 341.50, give or take, especially with solid close down below there. You can call it 341 if you want to be safe. And of course, the bulls, if they can take out that downtrend line with conviction, especially the previous highs here, and then especially burn through the divergences, well, that would probably give us some more upside in the near term. I'm going to get to my thoughts. Just to reiterate my thoughts, because there was a good question in the on the comment section. Let me do that. Before I get into the commodities, let's jump into the questions. The last two posts today, before I started the video, I didn't see any questions there. I'll check that again, or comments. So I'm just going to real quickly, for everybody's benefit, go over the ones that I answered today. This is from yesterday's post with that SON trade idea, SONN and VXX. Hi Randy, just joined, long time watching YouTube videos, great stuff. Any tips for getting custom the website? And so what I said is there isn't really a schedule. If you guys have followed the site, you know this. Videos and posts occur as needed. Oh no, that's actually someone else's reply. Where's my answer here? It's kind of disappeared. Let me find that real quick. Oh, okay. Yeah, I want to thank TJS for answering before me. I didn't see that, and then kind of put mine behind there. So basically, as far as the schedule, the trade ideas that I post will vary, and the analysis will vary on several factors, but mainly it's a function of the number of compelling trade ideas that I'm following or seeing at any point in time, or as well as how fast or slow the charts are developing. In other words, during a correction like we've had, we're either in now, depending on how you want to look at it. Maybe it's over, maybe not. But I'm talking about from the highs in November on QQQ, 18% drop. You're going to see things on a daily basis. They're going to change. You have big moves in the market. Divergence is set up much faster than, I'm talking about much faster than the slow grind that we had for many months leading up to that. And so therefore, I'm going to post a lot more updates. And that holds true whether I'm covering gold, Bitcoin, wheat, corn, soybeans, individual stocks, anything. So it's a function of that. Know that I'm not a robot, so when there's money to be made, and that's how traders make money. It's not a consistent, the stock market, I always say it's not like an ATM that consistently prints money. There are periods, just short, brief periods where you make most of your money for the year, when things move, when you get in on big explosive move, whether it's again gold, stock market, whatever else. That's always how it's been for me. The bulk of my profits tend to come in those waves, and then learn to recognize when it's time to step away from the market and either lighten, cut back on your trading or not. So that's it. And so when things are a slow day, I'll tell you I'm going to take the day off, do some errands. But usually, here's the thing: I'll usually do at least 1 or 2 posts a day, posts per days, with mix of videos and chart screenshots. And as always, feel free to post any questions or your own analysis down below in the comments section. Then I go on. You can read that. You can see how to find what you're looking for with the trade ideas. I have a symbol tagging system that I find it invaluable for myself at the bottom of every post. It's not gonna, yeah, there it is. These are all symbol tags. You can also, there's a drop down box under the help center under resources on the main menu. So whatever you see, if I click on VXX, it's going to load all trades in chronological order that I've ever posted that included analysis or trade ideas on VXX or the VIX in that case, or SONN. All right, so that's that. Let's move on. Somebody asked about, and then again, yeah, that TJS replied pretty much said what I said, so I appreciate that chiming in there, that videos just are gonna, and individual posts will come based on what I'm seeing, and that's gonna vary. Let's go down to this Son trade is tough if it hits T1, blah blah blah. I went on to say, here's the thing about Son. I wouldn't get married to it, and I made that clear. It's a penny stock. A penny stock is what I call a gunslinger trade. What does that mean? Another way to define it, I call it your Vegas money type trade. You put in a stock like that, what you're willing to lose 100%. I'm not a gambler, but if I were to go to Vegas, I'd put X amount in my pocket, or say here's my limit. I'm willing to bet X and lose it all. I know the odds are against me, so statistically, I will lose. I'm going there for a good time. That's your Vegas money. And again, it's what you're willing to lose. And so, I posted it because I had a price alert go off. But here's what I went on to say, just so you know my thoughts on it. And I'll do a brief update. I said I'd like it much better. I would have liked it much better 6 to 12 months ago when the armchair Reddit traders, meaning that's the, what is that, Robinhood crowd, they were gaming all those crap stocks with their COVID checks that they got. GameStop, what are the other ones? AMC and the likes, and there were a lot of them. And look, hey, if you were doing that, great. It's all about making money. It doesn't matter for whatever reasons you were doing it. But as you know, if you were doing that, that gig is kind of up. They're not ramping up those stocks like they were. That trade is kind of, most of those people have learned that by now they've probably given back what they made and then some in most cases. All right, so that's over. Now where I'm going is, this was a penny stock, this SONN, and those are the ones that are going to do much better in those type of environments. So that was A, those days are clearly over, and B, the stock market back then was in a solid and strong bullish trend. When it's clearly in a bearish trend now. So look, that doesn't mean it can't play out. There's been every day there's something going up, something going down. But I wanted to say that's why I pass it along. And so the odds are really not as good as they would be. But again, it's a trade idea passed on, take it or not. And just to show you where where that one is, let me grab the chart here. That was SONN. We closed on a back test today. Yesterday we did have a breakout that we did get a daily close above, but not much. You can see I really have to zoom in. There's the downtrend line. We gave up some of the intraday gains. So on these, I'll tell you, I like to see these when they pop. You see just strong follow through buying, especially on the second day. Now it is a back test, but again, is it a back test that I'm harping on as buying? No. Probably would let it go. It could still hold the back test, but here's the thing. If it fails that, we close right about on the trend line. If it takes out today's low, you might want to let it go. Throw that one away. Again, I'm not seeing the follow through. So if you're in it, great. Just don't let it get away from you. You can use a daily close. The only problem with that is if you wait for a daily close, sometimes these things can move down a lot by the end of the day. So you got to have your stop somewhere in there. So you take a minimal loss and move on. And again, if it wasn't your cup of tea, you should have passed. These are speculative, high-risk trades. It's not the typical type of trade I post, just what popped up yesterday when I had a price alert on it. All right. please cover commodities, oil, gas, and wheat, which I'm about to do. Just wanted to say that wheat is being driven by very strong fundamentals, more so than technicals, because Ukraine's a major wheat producer. And again, this is what we're seeing now. I've heard it saying likened to, we haven't seen anything like this with a major a superpower invading another country, Russia invading Ukraine since World War II. So this is kind of different times. When I see that kind of thing, I stand aside. If I can get something very, very strong in the charts, I'll make a trade. Otherwise, let the dust settle on that one. Again, I'll go over the charts for you, but there are some other commodities that stand out, some things that I see, coffee, crude oil. I'll show you those in a second here. And then here's a good one, and then I'll move on and get to the commodities. Randy, is it time to scale out of the short positions and join the 90 percenters in their long positions? I'm not sure who those are, but maybe 90% of the people. I would like it if the majority is long right now. It makes it better for a big drop. But okay, so are you taking back your call for an RTY crash? It looks like the buy the dipper bulls are parting again. Okay, so the only way I can see a falling knife is to turn the charts upside down and so forth and so on. So here's someone questioning the position. Understood. Now, again, I'm going to give you my opinion, my positioning, right or wrong. Doesn't mean you need to do it. I always say this. It's an old adage. This isn't mine. I didn't come up with this. This has been around forever. In investing, just like trading, active trading, sell down to the point at which you can sleep at night. Because if you're taking a loss on the kickback, that you're giving back more profits than you want to give back, or you're gone underwater, depending on your entry, and it's concerning. Or you just don't see it in the charts. You don't see what I see. Get out. Or again, sell down to the point where you can sleep at night. So my reply, no, not for me, not yet. I still think RTY, which by the way, RTY is a small cap future, so that's just the same as the IWM or TZA, trades for the small caps. I still think it offers one of the best risk-reward ratios for shorting in years. Right here, not too far below that 2100 resistance. Again, that's an RTY. That's a comparable level on IWM as whatever it is. With about a 6-to-1 or better risk-reward ratio just to my first target. I said, while I would still keep that crash warning sign, metaphorically speaking, I'd keep that sign turned on right now, just saying that the odds, the ingredients are still in place for a sudden and swift big move down in the market. That's just one scenario of where did I go here? Yeah, that's just a scenario of a very fast and strong drop that's going to get us down to those next targets. So I went on to say maybe we'll get to those targets, maybe not, but we can also get there in a more drawn out fashion. For example, we could have a multi-week or even a multi-month consolidation around where we are while remaining below those previous highs, and then go on to hit those targets. So, and I added to that, I still favor that strong and swift leg down. Looks right now those weekly bear flags aren't playing out perfectly, so that cuts the odds back. Certainly, in my opinion, doesn't eliminate it, but it cuts it back. We could still drop without perfect flags playing out. But then I went on to say, and this is important, I think. You guys, if you followed me for a while, you've heard me say this many times. The reason I prefer to trade stocks, ETFs, and futures over options is that it's one thing to accurately predict where the market or a stock, commodity, etc. is going, but it is an order of magnitude more difficult to say exactly when it's going to get there. So here, we'll take that IWM chart, and then I promise you I'll move on to the commodities. I told you I'd work towards shorter videos, but I think this stuff is important. So here's IWM. Again, to me, I covered this many times. We start going above that 208.48, a little bit above there. You give it some room. You don't always get a perfect back. We had a perfect back test there, and you can go up. But again, the farther we get above there and you start taking out the moving averages, put it this way. If I want to make this super simple, and don't hold me to these exact levels right here, but roughly, this would be what I'd call my scale out zone on those IWM charts, maybe even tighter there. All right, and this is where I would go very heavy in, increase the use of leverage if and when those recent lows break. So scale out, because with each tick higher over that level, The whole case that, hey, maybe the correction's over and we're going to new highs increases. I don't want to ride it up to new highs. I certainly will not ride up to new highs. But as of now, we're still below a major support level. We broke down. We had a sharp drop, another sharp move. I know bulls see what they want to see. I see it too. I see a potential W bottoming patterns, by the way. I'm sure that people are throwing things like that out there. They come just like inverse head and shoulders patterns after a prolonged downtrend. This is just a blip. Zoom back out. Here's your bull trend here. That is not a bottom. You wouldn't look for a bottoming pattern on a correction. Not at that scope. You look for it after in a bear market or something else, or on a 60-minute chart. Yeah, on a smaller scale, you can get a 60-minute bottoming pattern. Not right here. And again, we might have to have another leg down for that. But again, the most important thing, forget about the chart pattern, is that price level. And here we go. So, you're looking at it's less than 3% up to that level there. And my next target, which again is just the next target, is about 16% down. And then, of course, there's very much a possibility if that's hit, we're going to roll over to some longer-term indicators and may have much more downside. So that's my thoughts. As of now, the risk reward, in my opinion, is skewed and favors being short, especially because we're on something like this, because that's the one that he mentioned in that question. We're so close to the resistance level that it's not too late to even short it here for that next leg down. Because if you did, again, you give yourself, let's say, a 4% stop for a 16% profit, and that's an excellent 4-to-1 risk reward ratio. Okay, maybe a little too much talking in the equity markets, but that's, I think, important. All right, now we're going to roll into commodities. I'm going to continue to talk fast. I'm going to go through, I'll stick with, I'm just going through my commodities watch list that I have with ETNs and ETFs. A couple of these I might get to the futures charts, and again, I'm going to rifle through these, some of them quicker than others if I don't see much. JJU, this is aluminum. And you can see this just, the aluminum index, it's just skyrocketing up. Parabolic runs typically don't end very well. So when this corrects, at least you're going to come back down to this trend line. Then you want to watch for a break of that trend line. Could be more. I don't see anything on this chart that would make me go long. I don't chase moves that have gotten so far so fast. I just don't have I can't make an objective case to go long or short right now. I'll watch it, bearish engulfing candle or any other type of multiple day candlestick reversal pattern, things like that. Might consider a short, but not at this point in time. I'd rather miss that one than try to get in there when just taking a random shot. Wheat's gone parabolic. This is the wheat ETN. It remains above its primary uptrend line right here. And again, this is what's going on in the Ukraine has caused wheat prices to surge. JJG is a ETN that combines corn, wheat, and soybeans, so obviously that's doing that. And remember, corn in particular, these are your three big grains, but corn is an alternative to wheat. I mean, you're not going to make your pasta with it. Yeah, pasta prices are going to go up at the store because that's made of wheat, but corn, certain things and cattle feed and stuff like that. And people can switch from the wheat tortilla shells to the corn tortilla shells, when you go to so corn and wheat tend to move together, and they're also grown in similar type climates usually. So that's just the three combined ETF there. PALL, there's another one that's benefiting from what's going on over there because Russia, if I'm not mistaken, is the second largest palladium producer. Palladium is one of the platinum group of metals with platinum, palladium, rhodium, and those are used in the primary use in palladium is vehicle emissions, and so right now. But more importantly, you have what's going on in Russia driving this. So that's more of, again, a fundamental trade. There's a trend line there it needs to take out. And right now, I don't see, you are developing divergence. And so I think a lot like crude, there's going to come a point where these commodities are going to just, the weight of these commodities and the high prices are going to take its toll on the economy. I have no doubt it's taking its toll on the economy now. I have no doubt. It just takes a while for a lot of the professionals on Wall Street and especially Main Street to see that, and they wait for GDP numbers, they wait for retail sales to drop. I don't wait to see those reports. I just look at the retailers. I look at XRT and I see what's going on. It tells me what's going on in Retailville. But again, you can wait for the economic reports. Let's get back to where I was. All right, PALL. That's palladium. Really, watch it, but no strong opinion on it. There's copper, also spiking up. Been persistently bullish on gold and silver, saying, look, all these other industrial metals are going up because of the inflation trade. And, this point of this video was not to cover gold. We're not going to, I said I won't cover it. But just to update it, because it does fall in the realm of commodities. It's a precious metal, but it's also an industrial metal. So there it is. So far, the breakout's solid and it's still well intact. And again, a lot of these others, when you look at, like, for example, palladium up strong. Palladium's had bigger gains. This chart is a little deceptive since the 2020 lows right here. Well, gosh, it's been all over the place. We had a correction in palladium, so I take that back. But it's still near its all-time highs right there. You can see that's right there. And you see things like silver as well catching up now. That's been silver and gold were the ones lagging behind, and I've had a preference towards silver, as I've told you recently, over gold, but I like them both in there. All right, next up, going back to where we were, and again, remember my these commodities are not in any particular order. That was copper, which I already covered. Next up is cotton. Cotton I threw out a few weeks back, and I've done some updates as a short trade. Cotton broke this trend line here. First you had this one broken down, back test. You had a big divergent high right there. A lot of these commodities, if you had divergence that I pointed out recently, it got burned through. This one's still intact. Broke down, but it's not really going anywhere yet, but I still think this one's going lower. Down, I give you 3 targets there, and then I still believe we're in a early stage bull market action in all commodities. So there'll be corrections along the way, and but if I had to just what I told you guys 2 years ago, I think I said it about a year and a half, 2 years ago after COVID. If I had to sail around the world for a year and could only put all my money in one thing, it would have been commodities, and because they were just, I mean, from a pure valuation basis, all you have to do is look at the charts, look at the long-term charts, commodity index, a general commodity index, or individual commodities, and see where they were 2 years ago compared to where they were in the high. A lot of people didn't realize they were in a vicious bear market when the stock market was insanely valued and going higher and higher and higher. And then the thing about the stock market, there's financial engineering that brings Apple and all these other companies up, stock buybacks, things like that. But commodities, the world's only getting bigger and more crowded. There's more and more demand for this. There's less and less arable land as we develop the earth. There's fewer and fewer resources. How much more palladium and platinum and crude oil can we take out of the ground? How much more expensive is it going to get to grow cotton? Price of oil shooting up. The farmers got to buy the big John Deere combines or whatever they call. Well, cottons I guess still picked by hand. I'm talking about grains. I'm going all over the place. But the cost for farming and commodities, the longer term outlook, and again from a pure valuation basis, here we are in the hottest inflation environment we've been in many years, and I'm going to get to the general commodity index in a second and show you that. So either way, that one looks like may still correct. JJS, this is the Bloomberg softs. This is just softs, and this one holds coffee, cotton, and sugar. And you can see it's above trend, but like a lot of these, it's certainly getting frothy. You get corrections. This is only a daily chart. I'll get to the weeklies in a second. So you'll get a correction soon. At minimum, probably come back to that trend line there. PPLT, platinum, walking up this uptrend line here. No strong opinion there. Corn. I told you corn's a beneficiary of the wheat prices going up, so it's not going up as much, but there's a primary trend line to watch. If and when broken, it's probably going to give us a correction. But remember, we already had a nice correction. This was bull market, just like what gold did. Nothing goes up forever. We had a correction, and I always say this. Securities, that's a stock, a commodity, anything you could trade, they can correct in one of two ways. They can correct in price, and that's what most people think of a correction when something drops, but they can also correct in time. And this was a correction in time, which is more bullish of the two. when you go sideways, you work off the overbought conditions, and then out of that comes the next leg up. And that's what happened in corn. Again, would I touch it? No. Too much going on over there fundamentally right now. 2 days from now, I may give you setups in corn and wheat. Don't be surprised. If I see something I don't see today, I'll do that and throw it out to you. All right, so here's one of the best balanced commodity ETFs. It's GCC, the Wisdom Tree Continuous Commodity Index Fund. It's got softs and everything in there: precious metals, energy, livestock, industrial metals, nat gas. And this is what I call the bane of Powell right here. And I've been saying it for a while. And boy, he's really backed himself in the corner now, keeping it too easy for too long. He and the Fed had many opportunities to start tightening the reins when things were exploding higher, everything, for the last 2 years. But he waited to now, and now, of course, he's got the Russian conflict, which he'll lean on, and he's using that already. It's pretty much baked in the cake that he's cowed down. Well, he got what he wanted. If he had his way, he wouldn't have to raise rates at all. He'd keep rates zero forever. But now the 50 basis points probably out of the window, off the table, I should say. And we're going to get the 25 basis points. So no surprise for the markets. That's also why they held up, because they see him, doing his usual easy thing. But this really, guys, the longer he ignores this or neglects to act on it with much more aggressive hikes, not talking about a rate hike for the last 4 or 5 months and then finally giving a little meaningless quarter point hike here. It's really a token hike. It takes rates from 0 to 0.25%, the federal funds rate. No, it's going to take more than that to stop this. So this is going to sooner or later cause problems in the financial system and in the markets, and it may force his hand or the Fed's hand for either an intermediate rate cuts or much more aggressive rate hikes, because this will destroy the economy, runaway inflation, and that's what you're looking at here, guys. This is inflation. If you're sitting there waiting for the CPI report, which is always understated and lagged to begin with, come around, this is all you have to look at here. This and the housing market, those two together will tell you what inflation's doing, because that's it, the largest components: food, oil, and housing. That's it. So where are we at? Well, obviously oil's taken off and the grains have taken off with what's going on, and so we'll probably at some point, this is a parabolic run. Minimum, we're probably going to come back soon and correct to this uptrend line. Who knows? Maybe the catalyst will be something the Fed says or does. Maybe it'll be something ECB says or does. Maybe it'll be none of the above. I wouldn't chase it here. And you can't really short it, because when you get in these parabolic runs, don't underestimate how far and how long they can go. I'll keep posting this, but just know that we're very overbought on just about everything else. And again, this is just crushing Powell's hopes to kind of start and give the markets a nice, easy transition into increasing interest rates. Now you can't. This is what's happening because he's being too easy. The Fed's being too easy and complacent with checking this inflation that's out of control. Moo is your agribusiness ETF. That means you're not looking at commodities in here. It's made up of companies that make equipment. You'll have like John Deere and I think Tyson. No, this is Tyson Food, Mosaic. Tractor Supply Company is in here, CF, ICL. So you have all types of companies, fertilizer makers. So remember, these are stocks. This has been a bullish trade. They've been benefiting from the commodities boom, but they are stocks. They are equities. So what you want to watch, big level here at about 89.19. When that breaks, that sector will most likely be headed down. And the fact it's building some pretty big divergences says it likely will break down soon. DBA Agricultural ETF Fund, again, this one has a very broad diversification: cattle, soybeans, sugar, corn. You think you can't read them on there. It's got them all: wheat, coffee, hogs, cattle, cotton. Still above trend. That's just the bull marches on in commodities. When these trend lines start to break, we'll probably have a correction again. It'll be what I believe to be a bull market correction. Could be profitable to trade, but right now there's no reason to fight this. At least a broad base. It's hit and run. I'm only going to be hit and run selective, as I have been for a while in commodities. Soybeans, also grain going up with but you've got a little bit of divergence forming here. Here, let's look at ZS. ZS are the futures. Let's see, I think I've got a chart marked up here somewhere on ZS. I just need to find it. Bear with me. Let me pause the video and look for that. There it is on daily chart. You've got an uptrend line there, and you've got some pretty steep divergence here. This is again the daily chart of ZS soybean futures, and so when this little parabolic pop we've seen lately in the grains ends, that one's looking for a correction. If it could take out the trend line, there was one brief pop below it. Here, let me zoom in a little bit for you. I would give it one more stop here. Decent support around that 1609 level, and then maybe come down to 1541. Depending on when we break down, that'd be a drop of about 8%, nothing much. But that'd be a pullback target for you. Let's go back to the ETN. That's SOYB, and let me move on. I'm, again, not crazy about trading that one right now. DJP, Dow Jones, USB Commodity Index, total return. So here's a well-diversified commodities ETN as well, just ripping, running away. Really nothing in the charts that make me want to short it right now, or get on board at this point. Gold, I already covered gold for you. Coal. This video is going too long. I was going to go over. I'd leave this one on. They did this ETF stopped trading. I used to trade it for a long time, and it just went away. They terminated it back at the end of 2020. But I leave it on my chart. It reminds me to look at my coal stocks. I have a watch list of various coal stocks. You can see them all right here, and I'll go over those in a separate video for you. And one thing I wanted to do, as I told you I would, we'll go back to GCC, talking about the commodities trade. So here's GCC, that general, very broad-based, diversified commodity index. So this is what I was talking about. This is that bear market that ended here. So the stock market's been doing nothing but going to all-time highs over that period. So again, I speak to the valuation, the inherent valuation. Should commodities in the inflationary environment we're in today still be worth, as strong as this run's been off the bottom, we're still, from where we were back in 2008, we're still 50% below those levels. So if we got up, and again, you do them all, they're all going to be similar, some more than others. I'll talk about the individual commodities. We're still selling it at half what a lot of commodities were, a decade or more ago, when we were in a non-inflationary environment. So that's why I think there's plenty more upside in the coming months and years, but you're going to see resistance levels along the way. There was a big low right there, so maybe we pop there or stop there for a little bit, and then we pull back, and hopefully we'll be able to, when we get these pullbacks, recycle in. I'd like to see something like this. There would be a good buy right there if we go back to 2266. Nice support right there. Okay, we'll go down the line here, almost done. Oil. This one I'm not crazy about. I have it in there. That's the K1 free. It doesn't track as well. A lot of people don't like those K1s that the ETNs kick out. So I'm going to show you a different oil ETN. There's sugar. Sugar broke this trend line. A little price channel here. It's been walking lower, but just recently broke out above the downtrend line. So the near term, it does get a little bit of resistance here. I'm going to have to study the chart further to tell you if I think there's more upside. I really haven't had time to look at that one in detail. LD, that's lead. It's a very thinly traded. That's why you have these spotty looking candles. But it's like everything, and again, it's another commodity. It's solidly in an uptrend. It's that simple. This is what an uptrend is. Higher highs and higher lows, right? So that's what we're doing there, and eventually you get a correction. So far, the corrections have just taken us back to this trend line. We may break that trend line at some point, but there's your bull market trend line. Clear bull market in lead and just about every other industrial metal. NIB, that's cocoa. I have different variations of this. We've been buying this one for years on this pullbacks. I've highlighted to this uptrend line right here, starting about this point, and each and every one we've had long opportunities there. It's stalling or slowing down against some other ones, but again, another pullback to that trend line would be objective if we get it, with a stop somewhat below. Next up would be wood and cut. These are the ETNs for lumber and timber and forestry. They're individual stocks. They're not the price of lumber. I always try to point that out. They because they are equities. They hold equities, I should say. Lumber and timber and forestry companies. They will likely go down if the market has another big drop. Cane is sugar, one of the two sugar ETNs out there that I track. Broke the downtrend line here just like SGG a minute ago, but came to support. So this is bull market action. So you had a nice trend line, broke it, but the buyer so far stepped in at the first decent support level and have been buying up sugar. Cut is the other timber and forestry ETF. Coffee had a breakdown recently. I saw it on KC as well. I'm kicking myself for not passing along to you guys. But there was a breakdown. We had a divergent high. It's at the first support now, so probably bounce here. If it's strong bull market, they can gobble up coffee at that level. So you could take a shot there. I'm not right now, I'll tell you, because we're coming off a pretty big divergent high, so we could see a little more downside in coffee. KC is the symbol for the futures. And what just happened there? Let's give you the 3-month chart. Well, this chart broke. It wasn't like this the other day. Did something funky here. You can see I had it there. I don't know what it's doing. It's not right. They'll fix that tomorrow. But there was a trend line right here that just broke, and that was the same one on JO that I showed you. But again, this chart's messed up, so let's move on. And crude, I know I've been warning about it for a long time. There's no reason to be short now. It's like everything else with what's going on in Ukraine. This thing's going straight up and zero sell signals, no trend line. It's above all trends. But I'm going to show you the 60-minute chart here in a second. But hopefully this is, I'm zoomed out here. This is a weekly chart, long term. But what we're looking at back here in, this is 2010 to about 2015 right there. That was big time resistance. We had all these peak highs right there. And so that's the resistance level we're at right now. You have big divergences on this. Again, this is a weekly chart. Big negative divergences. Just like you had negative divergences right there, and that happened right there. You had negative divergence back here on the RSI, and that happened. You had negative divergence on both indicators, the PPO and the RSI there. You had a big drop. And so there's big divergence. And you know, this is, again, it's a catch-22 for the market. If crude keeps going up, it's just going to collapse and crater the U.S. economy and the global economy because the cost there's a number. I told you, I forget what it is, for every $10 or dollar whatever barrel increase in a barrel of crude, it has an X impact on the global economy, or the U.S. GDP at least. And so that's what it looks like on the weekly chart. We just need to get those sell signals, and you zoom in tight. I'm going to do it the best I can here. If I zoom in a little bit, you can see there's your minor uptrend line is right here. You'll see that better on the daily chart. Let's try to do it right here. It's not letting me draw because I just zoomed in. Oh, I see why I'm outside the drawing area. You can't see what I'm looking at. Let's try this again. Here we go. All right, so this is our most recent uptrend line. It's pretty well defined. And there's our divergence. So we had a little one there, and we had a big correction in crude. We had a little one there, big correction in crude. So we'll see that better on the daily charts. Here, we'll look at USO because that's an ETN. So that would be, here's our near-term uptrend line. Looks something like this right there. So when that breaks, take us back to 55.50. That's 58.58. From where we're at right now, that is roughly a drop of about 22%. So now we have to get almost halfway there to get to the trend line to take it out. And you can also see, looking at USO, which is one of the more popular and liquid ETNs for crude, we had big resistance here with support, 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 and then a monster gap right here. We gap down. That's where we're at, and we're also to this downtrend there. So crude, from a technical perspective, I mean, you can make a case. It's hard to short something up that has such a strong fundamental backdrop for it right now. But The charts are showing you at resistance, divergences, and so to really narrow that down or hone in on an inter-exit, let's just look at the crude future 60-minute chart, CL, and you can see here we have some nice divergences there. You see these negative divergences. Now the thing is, here's a case where you had divergences forming and you burned through them, and this is when Ukraine started happening, and of course price of oil went up. But it can only go up so much, and again the technicals are going to kick in at some point. So here's your divergence line right there, and there's your negative divergence, especially from this point here on the PPO as well. And so if we crack that little minor trend line, that could take us back down. We could have a very sharp drop in crude. So if you're an aggressive trader, you could take a shot on the break of that trend line. Traders are going to look at that previous reaction high. They're also going to look at the next level of minor support right about here. And then certainly, let me give you one more line right here. Certainly some support. So we'll just say 90 to 80 right now would be my max target. That would be, if the trend line's taken out, that's going to be a drop of about almost 12%. Next up, cow. Cow has live cattle and lean hogs, and it just has resistance here. It just overshot 40.62. No strong opinion. Had a little minor trend line broken back at support. There's another trend line there. I'm not really keen on that one right now. UGA is unleaded gasoline, which I know everyone wants to know what that's going to do. There's your it's just by the skin of its teeth holding on to these potential divergences, negative divergence, and there's an uptrend line. So at least it's probably going to come back soon, pull back to that trend line. If it breaks a trend line, just like crude oil, look at that previous reaction high there, and then probably ultimately back here, this is where gasoline's going to have to settle. Otherwise, it's just going to crash the stock market and the economy if it keeps going up. So the powers that be will probably get it here. Plus, again, I imagine every short in the world has been squeezed out. There's probably like a next to zero short interest on crude oil and gasoline and things like in futures right now. So that's it. So if you're an aggressive trader, you can get take your shots, trail your stops down and let it run, because when they unwind this long trade, it could be pretty fast, or should be pretty fast and swift. Nat gas, I don't have much of an opinion on right now. There's my UNG chart. I'd have to go to the futures, and if anything stands out there, I'll let you know. I got to wrap this video up now. We're at the 42-minute mark. Again, I covered a lot. There are a lot of different commodities, and sometimes I'll break it down into ag commodities only. I just felt like doing a broad-based update for you, giving you my thoughts and the ones that stood out to me in here. So, all right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.